quick summary of status. Surface well locations and subsurface targets have been identified for the 4 wells. As followers of the story will already know, drilling permits are lodged with the relevant authorities, and the environmental update is currently being finalised to be lodged. Seismic processing is expected to be complete by the end of July, and then the work programme continues from there. We'll summarise that when we turn to the next slide. The resources that we're pursuing here, shown here on the screen, gross and net. For Selva North and South, these are prospective resources, and that net to Prospex is 5 BCF. East Selva and Ricardina are both prospective resources on a best estimate basis, and as you can see, they are 13 and 14 BCF respectively. And the investment case for this asset, how do we add value, is the opportunity to rapidly convert confirmed gas resources to high margin production because of the existing infrastructure that's already in place. So that cycle time from spend to cash flow is crucially important, and it goes back to that recycling through the various investment cycles that I defined in the investment case. So clearly, Selva offers a very near-term pathway to significantly increase production and cash flow, culminating in 2023, which basically saw the company invest in the asset in the initial drilling of PM1 well, then in acquiring the additional interest in Selva through the acquisition of the EOG, and then the final development capex in 2023. And what you can then see from that point onward is net cash flow coming out of the asset and repaying the cumulative cost that Prospex is exposed to. So you can see investment going in, positive cash flow going out, which is then invested in our other assets, and you can see the carry value as assessed for PM1, which sits on our balance sheet, and that number expressed in pounds is verifiable against our balance sheet. Looking onto the right, what we've done here, based on all the assumptions I've already covered, is looked at each of those wells, Selva North and South, that's 2 wells individually, Selva East and Ricardina. Recall, Selva North and South contingent resources, Selva East and Ricardina are prospective resources. And you can see how the value builds based on the assumptions we've applied. Now, anybody can look at that screen and see that there's very significant value upside, and all these numbers are net to our interest. Final element here, in the spirit of pursuing all aspects of potential value, I've added on an indicative block, and you can see that it's in dotted lines for storage. There is precedent in the Selva area for depleted fields to be turned into storage, and that's another path to value later in field life. So route to value here, increasing production reserves through the drilling program, de-risked by the recent seismic, leverage planned CPR to deliver debt funded, so that potentially reduces project equity requirement, and then upside from conversion of depleted reservoirs into gas storage. And you can see the timeline that we're talking about is consistent with the IMC we delivered in March. Effectively, it's planning preparation through the balance of 26 into designing and procuring with drilling planned to commence back end of 27.